Hello, I'm Rachel Jones for the Finance News Network. Joining me today from Centuria Capital Group is Group CEO John McBain. John, welcome back.
Thank you, Rachel.
Now, Centuria Capital is a fund manager with a 20-year track record. Can you tell me a little bit about the group?
Yes, Centuria Capital is an ASX listed fund manager with 4.9 billion in assets under management, and our stock code is CNI. Over a 20-year period, we've not only produced attractive investment returns in our managed funds, but also, and I'm very proud to say, in Centuria Capital itself. We're best known for our listed and unlisted property funds, and these include 2 real estate investment trusts with over 2 billion in assets under management, a very strong unlisted property funds business with 1.9 billion in assets under management, and also an investment bond business run under the brand Centuria Life. The investment bonds are tax-effective investment vehicles which generally invest outside the property area. They offer unique benefits to a growing client base. Today, this business has nearly 90,000 customers and $900 million in assets under management in its own right.
Thanks, John. Now, I understand the group is pleased with the results for the 12 months up until the 30th of June. What were the highlights?
We had a fantastic 2018 financial year. Our operating net profit after tax exceeded $45 million. Our operating earnings per security at 16.3 cents was above guidance, and our distribution was on guidance at 8.2 cents per security, up 9% from 2017. Total shareholder returns were 23%, and this is the second year that they've exceeded 20%.
Now, John, what do you consider to be the main drivers of Centuria's performance?
There were 3 main drivers. We had extremely strong growth in assets under management of 29%. Within this result, we had 1.1 billion in organic property acquisitions and revaluations, up 30% on the previous year, and a 12.5% growth in investment bond assets to 900 million. In addition, unlisted property performance fees were 25.8 million pre-tax for the period. And finally, we delivered on our planned growth in recurring revenues, up to 67 million, 75% increased since 2017.
Now, can you tell us a little bit more about the business in more detail, starting with the property funds management?
Property is a $4 billion division led very capably by Jason Hulich. Jason's the Centuria founder with a 20-year track record, and he's a director of Centuria Capital and has been since 2007. Centuria Property is now a nationwide investment platform, and in 2018 we launched 3 new major unlisted property funds, established the open-ended unlisted Centuria Diversified Fund, and we grew our 2 listed real estate investment trusts, CMA and CIP, to 2.1 billion in assets. Both of these REITs are ASX 300 listed. We also increased property co-investments to 278 million, with a 19.9% stake in each REIT.
And how about the investment bonds management?
We're the 4th largest player in this sector, and this represents an 11% share of a 7.6 billion Australian market. We're currently investing heavily in this business. We believe it's an attractive alternative to superannuation for many Australians, now not permitted to contribute further to the superannuation balances.
And finally, John, what is the outlook for Centuria for the first half of 2019?
We believe the low interest rate environment will be sustained, leaving investors hungry for quality, well-yielding investment opportunities. One of the unique factors underpinning Centuria's success is our extremely strong and loyal investor base, built over 20 years. We are oversubscribed to a significant extent each time we offer a new fund. So at Centuria, we're extremely confident of our ability to continue to deliver new fund opportunities to our clients in 2019 and beyond. This should satisfy their requirement for quality investment funds, but also increases Centuria Capital's assets under management as a group. During 2018, Centuria Capital grew its market capitalisation to 430 million, as I previously stated, while still providing over 20% in total shareholder returns. We aim to continue this growth, seeking ASX 300 inclusion as our capital base expands. From a capital markets perspective, we have a very strong, lowly geared balance sheet, and whilst we never lose focus on organic growth, we have a reputation for taking corporate transaction opportunities where these make sense. This will continue.
John McBain, congratulations on your results and thanks for the update.
Thank you, Rachel.